Hi, everybody. Thank you so much for joining us today. So we are doing these weekly calls just to help people understand where the market's at. I think there's just a lot of uncertainty and people are trying to make decisions on whether they should buy, whether they should sell, or if there's still a good time to invest. And so market's kind of changing on a daily basis, but I have noticed there's been trends for it's more stabilizing right now. So that is a positive thing. Of course, we still don't know what's going to happen in the future, but all we can do is sort of look at the snapshot that we have now and make decisions based on that, and also kind of look at it more of a long-term perspective, especially in real estate. Owning an asset and having that diversification right now, in hard assets versus having all of our money in the stock market, I still think is a really important thing, and it is going to hedge our bets for inflation in the future. So I'm going to go ahead and share my screen so you guys let me do that right now. So on utahrealestate.com, this is our Utah MLS, our multiple listing service. So they are where we list all of our homes. So they've compiled some data, and I'm looking at this pretty closely every day. So I'm just going to quickly go through this to give you guys an idea of where things are at. So if we look at this blue line here, this is 2020, and these are active homes on the market. So you can see we kind of had a little bit of a dip down in March, but things have steadily been going up. This is pretty much the trend you're going to see in a spring market. What we weren't sure about is how this was going to be affected, if people were going to hold off on listing. But the reality is people still have to move and people still have to buy homes even in uncertain times. And so I do feel encouraged by the fact that there is still a good amount of inventory. But when you look at January here, you can see we were quite a bit off. There was a lot less inventory at the beginning of the year. So what that did is increase demand a lot. So there was multiple offers, crazy price jumps. So that is still continuing actually, and depending on the market that you're in, but it's still continuing because there still is less inventory here than there even was last year. And last year was still a tight market. So this just goes county by county. So I'm just gonna pull up to Salt Lake. And this is just, again, active listings as of today. So this goes day by day. So we're still off a little bit, but it's not actually in Salt Lake County. It's been a little more stable year over year. So you can see right here, this is, let's see, let me just make sure this is this year, 2,000 homes. And you're not seeing like a flood of homes on the market or anything like that as of today. The average number of active residential listings per day. So this goes from 2016 to 2020. And as you can see here, we're sort of in line with 2018 as far as how many active listings we have. So that's, but you can see here, these trends are sort of pretty in line with each other over the last several years. But last year we did have a little more inventory than we have this year. So, and this gives us even a better idea, but in March here, 2020, we had 6,400 active listings, and in March 2019, there was 8,300. So that's quite a bit. And that's actually a good thing in that we're not starting this uncertain economic situation where we're already in a slower market. So one thing that I've talked to my lender about is we might not see a market crash, but we might see a stabilization of the market, which would actually not be a bad thing to create some stability and less crazy price jumps in our market. So if you look over here, the next slide is under contract and residential listings per day. So you can see that there are still houses going under contract. So this purple line is the one we want to see continuing to increase and kind of matching that 2019 line. Of course, it actually was higher at the beginning of March. It's gone down a little bit. And I did see some people holding off. There are some of my clients that were furloughed that, haven't been able to buy anything yet, or kind of holding off until they can get more stable employment. But the good news is we're not seeing this tank, but we are watching this number pretty closely because this is a really good indicator if the market is still moving, because active listings is great, but if people aren't actually buying them, then that's where we're seeing a problem. But that doesn't appear to be happening as of today. So we've got, I'm going to go back to Salt Lake. So last year we had 2,700 homes under contract. And this year it's 2,102. We did have a little more inventory last year at this time, but these numbers are still, we're still seeing these numbers go up. If you look at the purple boxes here, this is actually the past week. So we're not seeing any massive drop-offs. The average number of under contracts, so you can see this line is following the trend here. So again, we're going to be keeping everybody up to date. We have a market stats email that we send out once a month just to kind of go over how this year, each month compared to the last year that month, to help people understand where the market's at. And right here, this line March had 7,224 under contracts, and 2019 it was a little bit lower. So the off market isn't as important, but sold is another one that we want to look at as well. So in, I'm just gonna pull down here. In March, we saw 3,539 sold homes. And that is pretty much exactly the same as we saw in 2019. Now, I'm really curious to see what April's numbers will be, but it is trending that it's going to be similar. Now, May, June, July is where we're going to really potentially see changes in those numbers. But I'm not seeing, what we are not seeing that right now. We are seeing a pretty normal spring market as normal. It's not exactly normal, but it is pretty similar to what we've seen in past spring markets, but a little bit slower with some of our buyers. So that is really the numbers here. And I know the numbers are changing all the time. So we are watching this every day, and that's why we're having these sort of once a week calls just to help people understand what those are. But we are always here as a resource if you have specific questions for us. So I am going to go ahead and stop my screen share. Do we have Ashley on here? Ashley Shipley is joining us. She is a lender with Veritas Mortgage, and she is going to talk to us a little bit about what the lending market looks like right now, what mortgages look like, how that affects the housing market. And there has been a lot of uncertainty and a lot of craziness, but it seems to me that things are settling down. Ashley, is that correct?
It's so great. So government funding, which would be your VA, FHA, USDA loans, last Friday, just to lock a loan, period, you were looking at 1.5% cost just to lock it, no matter what the rate was. The rate could be 6%, and you're still paying a ton of money. That's because investors weren't lending on those type of loans. As of this past Monday, so 4 days ago, investors have started to loosen that tremendously. So for 2 days, the minimum credit score on mortgages was going to be 700. Then they backed it back down to 680. Now it's back down to 660. What that tells me is that investors are starting to trust the market again, that the craziness of those 30 days of initial quarantine have kind of calmed down. We kind of have a new normal, more or less, and that people are starting to qualify for these loans again. So I just priced out a VA loan and it was 2.750. That's insane. That's fantastic. Conventional pricing has remained fairly low, depending on credit score, anywhere from 3.3 to 4%. And the guidelines are strict, but that's on your lender, not so much on you. So things like your verification of employment needs to be current within 3 days instead of 10. But the portion that made it difficult for people to go get a home in the last 3 weeks is all but gone. So a lot of my people that were priced out of the market, couldn't qualify, their credit score didn't meet the new guidelines, they're back in it now. 2 of them are back under contract. So I think that we're seeing drastic improvements, and again, that the investors have adjusted to the new normal, and we're seeing that as an improvement to pricing for people in the market. I haven't seen a change in business. I still have the exact same amount of buyers and sellers, and they're just buying and selling differently. I mean, who goes to a listing with masks on? We do now.
Yeah.
But they're still moving, which is awesome. I don't think Utah's going to get hit by this like other places are. That makes sense.
I agree with that. We are still, real estate is an essential business or essential service. And so we are still able to go out there and show homes. And that is definitely keeping things moving in the market. I did want to ask you about jumbo loans. I know that that was an issue for a little bit. Is that still?
Yes. Jumbo loans are the highest risk. So she's saying jumbo loans, meaning that the loan amount is higher than the standard conforming loan limit. For most areas, that means your loan limit is over $600,000. Those loans are still atrocious. The places, so I typically broker those out, meaning that Veritas does not underwrite those in-house. They go to the company that is going to take the money. We had 9, we are down to 3. The rate on those is 1.5% higher than what I'm seeing for high conforming. Those are still high risk loans, and I have not seen any improvement whatsoever or any sign of those coming back, which is weird because they brought back lower income, lower credit score loans like an FHA loan. And if you're qualifying for a jumbo loan, typically that means you have more money coming in, a little bit better credit score, things like that. Doesn't matter. So I think it's just like more is on the line. So if that home defaults, it's not a $200,000, $250,000 investment. It's $1 million investment. So no improvement whatsoever. Those are still so painful.
And from my understanding, the jumbo, like the conventional loan limit is about $516,000 in Salt Lake County.
It depends. So you have a high conforming loan limit of $600,300 and conforming loan limit, it's per county, but it's $584,300.
Okay, so if you're in the luxury market, let's say high-end Park City homes, and you don't have the cash to put down, that's where you're going to feel the pain a lot more. In most of the homes in Salt Lake County and Utah County, Davis County, you're going to be just fine. Even if you have an $800,000, $900,000 home, a lot of people in those price ranges do have quite a bit of cash to put down. So it's not, but that is something to be aware of, to understand that there is some constraints there. Now, with the changes we've seen in the last month, I could imagine things could shift pretty quickly in opening that market back up, correct?
Fast. Things, I mean, for somebody to be priced out on Friday and have to spend $6,000 to even get a loan, period, to getting a 2.7 4 days later, that's how fast guidelines and things change. So absolutely, 1,000% that'll come back. And it's just a matter of when. But it is not, I haven't heard whispers or anything. If anything, it's still going the other way and we're losing additional options for those properties. I've been doing arrangements where you put 10% down and then get a second mortgage to help get the other to pay it down to conforming loan limits.
Okay. And
that program knows how special they are and that they're saving people right now. Their rate's 9% on that second.
Okay. But that's for that 10%. So there are options if people need it. And
there are still options. They're just painful. I think those are more short-term loans of like get in the house and pay your mortgage for a year and let all of this.
And see if you can refinance.
And then refinance it.
Okay. So it sounds like there are options. There's definitely uncertainty in the market. One thing I probably would conjecture from what you're saying right now is if you are a first-time home buyer or somebody looking to buy a home right now is a good time because things
you have to.
Okay. So we don't know what's going to happen in 3 to 6 months, but if you are trying to get into a home right now, interest rates are low. And it's the first time that some of those restrictions have lapsed in the last month.
And in Utah, you can attest to this, Emily, we had borrowers that struggled. December and January, it was impossible for first-time homebuyer, that range. I mean, you were up against 20, 30 offers and putting up to $20,000, $40,000 extra down on your offer and still not getting the home. That hasn't happened. Coronavirus has almost created an artificial buyer's market. So if you've been on the fence, go. Like,
I
this
would
is your chance, this is
say
your opportunity.
slight buyer's market, still seller's market. We've been dealing with a lot of competition. And it's interesting, it depends on the price range. So over about 500,000, it's going to be, you're going to have less people that actually qualify in that price range. If you're under 500 in Salt Lake County, well, I guess there's pockets of Salt Lake City and that 500 is way low. But we're seeing lots of competition in that lower price range still, but it's significantly less than it was.
Correct.
So it is a really good opportunity to get into a home that you can afford, especially if you have a stable job right now, because there are a lot of people that are dealing with uncertainty and don't want to tie themselves down to a mortgage right now, or aren't sure if they're going to have a job in the next, 90 days. So,
stimulus money can be used as down payment money.
Okay. So that's really good to know.
So that 100%, we just closed one that got their funds and it auto deposited into their account. They were sourced and they 100% were used. So another opportunity, because if you're buying a home with as little as 3% down and getting a chunk of money from the government, that's another opportunity to go improve your situation. Yeah. And if you're renting, I think a mortgage is safer than renting because it's a set payment for 30 years.
Yes, and you don't have to worry if a landlord sells their property or they can't pay their mortgage or who knows what's happening, right? So we definitely...
And it's appreciating in value and it's like a forced savings account.
Yeah, absolutely.
I know people are like, no, buying's scary right now. And I'm like, yeah, I'm the exact opposite, in my opinion.
One thing, so the owner of my office, our Keller Williams franchise, we just had a call with him and he had mentioned, with all the money being pumped into the economy from the government, there could be inflation, like there will be inflation. And one of the things that can hedge your bets against inflation is owning hard assets like real estate. So I think it is a really beneficial thing to own a hard asset if you don't already, and diversifying, because we've seen about I would say about 10 to 20% drop probably people have seen in their 401ks. And on our investments right now, on real estate investments, we've seen no drop in value yet. That could change, but at the same time, the markets go up and down, and same with the real estate market. So I always consider real estate a long-term investment. If you're looking to flip something right now, I would say maybe that's not the right time, but if you're looking for something to buy and hold, I think that it still is a good time. In fact, Todd and I we went under contract on an investment property in December, and we've been on the fence to try to decide if we want to continue moving forward with that. But we ran the numbers and kind of looking in the next 5-year forecast, we're still feeling pretty confident that this is a good investment. So we're going to continue to move forward with that and continue to look for opportunities in the market for investment opportunities and things. So do you guys have any questions? Any questions at all? We are going to be doing a class next week that I am going to be posting on our website. It's emilyhayeshomes.com/class. So if you want to check back on there, we're going to be doing like classes periodically, but mainly every week. We're going to be doing one on how to sell your home during COVID-19 and what are some of the strategies that we're using. Is this good time? I think everybody's situation is individual and different. And so we need to look at your situation on a case-by-case basis. But I do think that if you had plans to sell, I would continue with those plans. And then we can sort of reassess and see if there's anything that we might want to hold off on. I'm also encouraging people to move a little faster because we do know what the market is like right now and we don't know what it's going to be like in 6 months. So if you do need to sell, I would encourage you to sell now versus waiting 6 months to see what happens, because we know things are still moving. So if you have friends, family that are looking right now or thinking about it or have questions, we are consultants. So I'm Emily Hayes, if I didn't already introduce myself. Our company is Emily Hayes Homes. And my husband, Todd Hayes, works with me, and we love educating. This is why we're doing this right now. So we would definitely love to talk to anyone you know and sort of consult with them and see based on their situation, what makes the most sense, because not everybody is going to make the most sense to buy or sell right now, depending on their situation. But for the most part, I have good confidence in our market. And even at the top of the housing crash, I saw a couple of interesting statistics recently, and Ashley, you might be able to chime in on this. But at the beginning of the real estate crash in 2008, what people were doing was leveraging all their equity and pulling out and doing cash out refis and taking all their money out of their homes. And so when it was artificially inflating the markets and there was a lot of leverage on homes, right now lending standards are still really tight, and 50% of the population has 50% or more equity in their homes. So that creates quite a bit of market stability, that people aren't over leveraging themselves. And I don't know, Ashley, can you speak to any of that? Is that?
Not as much. I'm not the best one for this.
Okay.
I think that you're,
would you say lending standards are still, I mean, they're still as tight as they were 5, 6, 7, 8 years ago?
So they move a lot. Lending is never going to be like the crash. Again, Fannie and Freddie, the place that makes guidelines, didn't exist. They came into existence because of the crash. And I don't think we're going to lose the economy to the housing market.
Yeah.
Like
and last time
that's not the weakness. You don't have 5 or 6 mortgages on one property now.
Right. And that's where we're creating more stability in the market in that sense. So
they're almost getting harder.
I know. It's a good thing, because the one thing we don't want is a lot of leverage and then there to be this artificial
foreclosures
and then nobody can pay their mortgages, and the last
foreclosures would be the worst thing ever. And that's why, did you already speak to this before I jumped on about if you already have a mortgage, continue to pay it?
No.
The only worry is all these people who are doing forbearance, and in 3, 6, 9, 12 months, however long the forbearance period was, when that ends, almost all of the servicers that I've researched, you're immediately in default if that's not paid in full. So if you defer payments for 3 months and on month 4, you're not ready to pay 4 mortgage payments, you're immediately in default and they can start foreclosure proceedings, because the closing disclosures you sign at the title when you buy your house specifically state after 3 missed payments, you're in default.
Oh, okay.
Modify it, you're going to see a huge decrease in your ability to get any other lending, cars, houses in the future, refinance your house. That is the thing that all lenders are worried about right now, is what the forbearance stuff is going to do to our market when that runs out. We are anticipating a spike in short sales, and that's scary.
So one thing I think, and you can speak to this, Ashley, if you have any thoughts on this, that we're starting to do is pull out home equity lines of credit. Now, we're not pulling out the cash right now, but we're actually opening up the credit lines. That way, if anything happened and we needed to pull out that money, we could, because we have equity in our homes.
100% smarter.
And I would say utilize that equity in your home if you need to, rather than deferring your payments, because most people have quite a bit of equity in their homes, and you can, right now at least, you can still open up home equity lines of credit, or borrow from family, or do anything you can to be able to pay those rather than just skipping the payments altogether. So
please tell your friends and family, this is a big deal. Like, this can hurt someone. And if they're going to put payments on the back of a mortgage, that's a 30-year mortgage. That's kicking the can really far down the line, and no other lender is going to touch a modified loan. Take it, if you're going to do something like that, do it to your car payment, and flip the car payment to the back. That still opens up, like, I don't know, $200 to $300, $400. And home equity lines of credit are the best rates ever, because those are attached to the Fed. So you know how the Fed lowered interest rates to 0, and everyone thought that meant mortgage rates were 0? No. That's short-term lending. Short-term lending is a HELOC. That's like a 10-year-ish loan. This is the time to go get HELOCs. Those rates are fantastic. And they are variable, but if you don't pull from it, you're not paying on it. And it is still easier money to get than a mortgage. It takes 2 weeks instead of 4. And when you sell your property, it still pays that house off. And the home equity line of credit lenders are not letting people completely max out their equity. So you still have money left in your house after.
Yeah.
That is by far your safest bet, or moving credit card payments or car payments. So, I mean, it's the scariest thing for me right now is what's going to happen, because people are thinking they can skip mortgages.
And if you're in a situation where you're like, don't know if you can afford your mortgage, talk to me. We can look at potentially if you need to sell your home rather than ruining your credit and going into foreclosure. That's going to be your better option. And we could still get you money out of your house, and we could still put you in a better financial situation at that point. So if you know anyone in this situation, we just need to get all the information.
Friends and family, yeah.
Yeah. So
protect everyone you know. This is a bigger deal. This is what could crash the housing market. Don't take that as it's going to crash the housing market. But this has the potential to crash the housing market, not guidelines, not homes buying and selling. It's the fact that Americans are being told by senators that they can skip their mortgage payments. That's a problem.
Yeah, you want to consult with a local expert like Ashley or myself, not just listen to the news, because it's very confusing. They're not giving us exactly what the full picture is. So we want to talk to you and talk about what's happening locally in the Utah economy rather than having this alarmist attitude, because I will say I feel a lot more confident being in Utah than in other places in the country. We've had really been able to control the virus a lot better. Fingers crossed, like praying that continues. But we have some pretty good leadership here that is in a really healthy young population, and a lot of good jobs, tech jobs, university jobs that are more stable. Of course, there is always going to be people that are going to be affected by this. And if you know anyone in that situation, we also would love to talk to them and help them out any way we can. So Todd, were you
just keep your ears open?
Yes, please. And really, if you have anyone you know that is in a situation they're struggling, or don't know how they're going to pay their mortgage, like, we want to connect them to Ashley or myself. Todd, do you have something you were going to say?
Yeah, I was just going to reiterate, don't trust any information coming from like a senator or a friend of a friend, because that's what can get you into trouble. Like, you have to talk to an expert who knows these types of situations, because Ashley has said, like, she's not the first one. Almost every lender that I know of has said the same thing, is talk to us before you even go and defer, or even ask for a deferment, because that could hurt your credit as well, potentially.
Don't do it. I can't lend. If your loan is deferred, I can't lend on your loan until you've made a year of active payments. Do you know how terrifying that is? That could change, but that's the guideline right now. I have someone put their loan into deferment and then change their mind and want to refi. I can't touch it with a 9-foot pole. Yeah. That's terrifying. Now they've backed themselves into a corner and don't have a way out. So just keep your ears open and keep your eyes open. And if you see a friend post on Facebook that they just skipped their mortgage, just send them Emily's number and we will correct this.
Well, so I'm going to just say in closing, the things that I want to just make sure people know are the housing market so far it has been pretty consistent and is pretty stable right now. We're still seeing multiple offers, but we're not getting as many buyers or many multiple offers and many buyers out there as we were a couple months ago, but things are still moving. If you're looking to buy or sell, it's still a good time, especially if you're a seller, because the market is still moving. And if you're a buyer, interest rates are super low. There's less competition, so there's opportunity there. Do not skip your mortgage payment before you talk to Ashley or myself, or a lender that understands this, because you want to make sure that you're doing things the right way, and you don't want to put yourself in a situation where you're going to be foreclosed on in a few months. I feel like the outlook right now feels pretty positive, but I also don't know what's going to happen. We can't predict the future. So I think the best thing we can do is try to save our money, put ourselves in the best situation we can, protect our assets, protect our families. And we are doing a lot right now with our listings as well as our buyers, to make sure that we are all safe when we are looking at homes, and things like that. So there are a lot of things we're putting in place right now to make sure that we're all staying safe. If you guys need anything, let me know. I appreciate you guys popping on the call today. And is there any last questions anybody wants to ask? We got a clapping hands from Francis. Thank you so much. I'm glad you guys could attend today, and thank you for letting me record this. I will be posting this, so if anybody wants to share this with anybody, let me know, and you can go ahead and forward that on, so I'll have that up shortly. Okay, see you guys. Bye.
See you.